Hello everyone, welcome back to my channel. Today we are discussing a milestone shift in India's banking sector. Why and how small finance banks are evolving into universal banks. This change isn't just procedural. It's reshaping financial inclusion, service diversity, and banking flexibility. Let's unpack it in this video. First, what is the difference between small finance banks and universal banks? Small finance banks focus on financial inclusion, serving underserved segments with strict norms like 60% priority sector lending, 25% branches in unbanked rural areas, and half their loans or 50% of their loans under 25 lakhs. In contrast, universal banks offer full service banking, from retail to corporate, investments and wealth management services, with more capital and risk responsibilities. So, why would a small finance bank become a universal bank? In April 2024, RBI introduced transition guidelines requiring at least 1000 crore net worth, 5 years of solid performance, low NPS and high profitability as the basic norms for conversion of small finance banks into universal banks. Benefits of upgrading include lower capital adequacy norms, which is 11.5% for universal banks and 15% for small finance banks, relaxed lending caps, and newfound flexibility in services offered. AU Small Finance Bank is the first small finance bank in over a decade to secure in-principle approval pending promoter restructuring, making it a pioneer in India's small finance bank to universal bank journey. The promoter must transfer his 22% stake into a NOFHC within 18 months. Markets responded enthusiastically and AU Bank's shares jumped almost 7.5% to over 800 after this announcement. Other small finance banks are following. Jana Small Finance Bank applied in June 2025 as the third bank to seek universal license, joining Ujjivan and Equitas Bank in the queue. However, stricter supervisions mean it won't be easy at all. So, what does this shift mean for banking sector in India? Small finance banks gain room to diversify into secured retail, SME and other assets, especially following RBI's priority sector lending norms cut to 60% in FY26, freeing up capital to improve profitability and asset quality. To wrap up, transitioning from small finance bank to universal bank is more than a new license. It's India's banking evolution in motion. If you are curious about how this impacts customers, investors, and what small finance bank might be next, drop your questions below. Don't forget to like, share, and subscribe for more insights. See you next time.